banker side does not get implemented, then there is no high verification on that. You cannot do.
See, your point is right, but then where do we draw the line? Somewhere along the way, you have to draw the line and say, okay, I go ahead with what my other colleague, esteemed colleague, is saying. If I go to question everything, then there's nothing, there's no end point to it, right? So you have to believe that everybody is doing the job that they are doing to the best of their abilities, in letter and in spirit, and that's how one has to go.
One of the best auditors have been certifying the company, right? PwC has been certifying the company. I think it was about 10 years or 12 years or so. I think there was a counter argument that if you have to avoid, you have to have rotation of auditors to avoid such. So if there is somebody who is hand in gloves, that gets captured. But at the end of the day, there has to be somebody who has to certify and get ahead with it. You can't really keep checking it again and again.
And there is also another view that if you keep on changing the auditors, there's a negative impact on the bankers.
Both sides to it. Well, I can
give one example, small example that I came across recently. Now, what had happened was there was this client of a particular banker, my client, one sugar company. We had given them a D rating because there were some delays. Now, as per credit rating definition by SEBI and RBI, a 1 rupee delay, 1 rupee 1 day delay is to be brought down to a D rating. Now, what had happened was this particular client was given a D rating. But the banker called me up and says that, hey, you can't put my client in a D rating. That means we cannot fund them. I said, see, but the facts are that your client has been dealing and we cannot give them a higher rating because that's what your books are showing. So the banker said that, no, that's not correct. You guys don't know how to rate. I said, all right, there is a process within the company which says that as long as the banker certifies that the client does not have any delays or any delayed payments, 1 rupee, there is no 1 rupee 1 day delay, then the rating committee could take a positive outlook on the credit rating. Because suppose there's a delay, we don't even have to make a spreadsheet. It just goes down to a D straight. So what happened is the banker told me she would get back to me, but in the end of it, she didn't get back to me. And what I've noticed is that, see, there is a lot of passing of buck. They keep pointing fingers. Now, see, the bankers would point fingers at you, you would point fingers at someone else, they would point fingers at someone else. It's all passing of the buck. Now, just like Arijit mentioned, where do we draw the line? I mean, see, you want to fund your client, that's not my problem. I do a rating, I have given them a D because as far as my facts and figures go, they deal. I can't do anything. If you provide me a document, fair and well, okay, I don't have any problem in that. But then the banker doesn't want to do that. So it just goes around and round in circles.
Well, we had a very interesting discussion. We are running slightly behind schedule, so we have just time for one final question. One final question, if any of you have it, otherwise okay. Yes.
Good afternoon. Yeah, I had one question. My basic question is that we're looking at this whole FDI and reforms as some sort of panacea to cure the country of all its problems. And looking at the country over the last 20 years, without the strong regulatory framework, see your things like your telecom scam or your coal scam and things like that have exploded on the face primarily because there is no regulatory structure to regulate these industries. My central question is that without the regulatory structure, without strong mechanisms to deal with problems, will FDI cure any problems? As I see it, no. So.
Sure. So maybe I can start and then everyone will jump in. But I think you're absolutely right in that a country needs a strong internal regulatory framework, obviously. I think what FDI helps with is many different things. One, it's a form of patient capital, which we need for growth. So especially in certain key industries, if the Indian economy cannot fund these itself, it's really helpful to get patient capital along with expertise from various other sources. I think another interesting thing is just from a more macroeconomic perspective, we were doing some research. The Indian exchange rate with the dollar is very well correlated with inflows of FDI into the country. So in a lot of ways, what does FDI capital do? It comes in and it helps with productivity increases. Because there's also an element of monitoring which comes in with those flows. So I completely agree with you that we need a base regulatory framework because someone has to demarcate the rules for this capital to even want to come in. You can suddenly raise the limit in insurance, for example, from 26 to 49. But if every strategic insurance company globally sees that IRBA is changing its mind every 2 months, they'll be very nervous to actually put in the capital. So I think raising the limit is a step in the right direction because it helps with the ability to attract this capital. But to attract it and harness it appropriately, you need that strong regulatory framework for each industry. So,
just to add on to what Lavanya is saying, there is actually a regulatory framework already in place. For example, if we were to look at FIPB, Foreign Investment Promotion Board, right? Most of the cases, whenever there is foreign investment that happens, that needs to get rerouted through the board, get their final approval before which it comes to the relevant industry or relevant sector. So the regulatory framework is already in place. It's a matter of how well do we, how consistently, as Lavanya pointed out, how consistently and how well do we, take this through over a longish period of time. So that is what is more critical. And incidentally, the points that you're mentioning, they are not mutually exclusive. Both are required at the same point in time. You require FDI to come in so as to take the country forward in terms of, and the longish term growth capital that one talks about, because FII money, as we look at it, is much more hot money, which goes out, on a quarterly basis, so to speak, as soon as they've made their returns. But in addition to that, you also require a strong sense of, some kind of a ring fencing, which is what the strong sense of regulation brings into the fact. So we already have setups in place, we already have these agencies in place. It's just a matter of ensuring that these agencies do their job properly. That's all.
Just to add to this point, one element of your answer could also trigger some kind of a philosophical, more serious debate on the, but I'll not go into the merits of that debate because that's a separate subject by itself. We have regulators for the capital market, SEBI, we have regulators for insurance, we have regulators for the banking, Reserve Bank of India. There's a global debate on the issue of a super regulator versus specific regulators. For that would be entering into a very difficult and a big subject. So with these words, I close the discussion. It's my pleasant privilege to thank all the panelists who made very significant contributions. I'm thankful that we are all enlightened by the views of each one of them. And with these words, I thank you all once again. Thank you very much.
I would like to thank our speakers for being with us today. I would also like to extend my heartfelt gratitude to Dr. Manoranjan Sharma for moderating the event. With this, we come to the end of panel discussions. We will be having the valedictory session in 5 minutes. I request all the guests to please take their seat amongst the audience. Thank you.
Greetings to all the guests, dignitaries, the faculty, and the students of TAPMI Management Institute. On behalf of the entire TAPMI fraternity, I would like to thank all the distinguished guests for making this event a thought-provoking and an enriching experience for all of us. It is hoped that the insights which have emerged out of this event will be helpful for the students and the industry alike. I now call upon Nishit Maheshwari from the Finance Forum to give a brief summary of the events of the day.
Thank you, Pooja. Horizon, the finance conclave of TAPMI Management Institute, started with a full swing of as corporate guests from the finance sector showered the wealth of financial knowledge to the enthusiastic students of the institute. The conclave was inaugurated with the ceremonious lighting of the lamp by Dr. Manoranjan Sharma, Chief Economist, Canara Bank, Mr. Arijit Mukherjee, Senior Vice President, Anand Rathi, Mr. Hariprasad, Vice President, Treasury, Centrum Direct, Mr. Rohan Mathew from ICRA, Mr. Dr. Vasudev Rao, Dean Administration, Professor Chaudhary Prasad, Dean Branding and Promotion, and Professor Sunil Kumar Parmeshwaran, Head of Finance Area at TAPMI. Professor Sunil Kumar Parmeshwaran welcomed the guests and introduced the theme, New Economic Order Post-Crisis, Political Reforms, Regulation and Inclusive Growth. Dr. A.S. Vasudev Rao discussed upon the various accounting policies and systems. He emphasized the importance of Indian institutions in addressing the current financial issues. Individual lectures by eminent speakers on various aspects of finance followed the inauguration. Mr. Arijit Mukherjee, Senior Vice President at Anand Rathi, gave an overview of wealth management. He also addressed the concerns of students while selecting a career in finance. Mr. Hariprasad, Vice President, Centrum, provided an insight on the dynamics of foreign exchange with special focus on India, drawing an analogy between the appreciation of the US dollar and the depreciation of the Indian rupee, he elaborated the various factors that led to the same. Mr. Hariprasad also touched base upon the financial challenges faced in the Indian economy. Mr. Rohan Mathew, Senior Manager from ICRA, addressed the audience on credit ratings. He mentioned the current issues and specified measures that could be implemented to ensure better regulations in the rating industry. Mr. Sushil Shah from First Source initiated a discussion on the ground level scenario of bank functioning and shared his experience in the banking domain. He ran through the various activities of consumer banking and the career options that the banking industry has to provide. Ms. Lavanya Ashok, Private Investment Analyst at Goldman Sachs, presented an overview on the private equity investing in India, opportunities and challenges. The second half kicked off with a panel discussion on the theme of the conclave. Moderated by Dr. Manoranjan Sharma, Canara Bank, the salient features of the discussion included changes in the regulatory and supervisory systems, pending regulations, impact of the recent changes in the policy decisions, and continued foreign investor interest. The key takeaway of the discussion was the tremendous scope that India has to offer for development. We also have a workshop on mergers and acquisition by Mr. Shomitro Goswami, CEO, Astal Capital, where he would also be speaking on the DCF model to help understand valuation better. Also, Mr. Sanat Satyan from Nomura would be speaking on current challenges in the global investment banking industry tomorrow. All in all, Horizon 2012 proved to be an ideal platform for student-industry interaction. Thank you.
Thank you, Nishit. On our journey to Horizon 2012, we conducted 2 intra-TAPMI events. First is the Yaksha Prashna, which is a quiz conducted in association with ESPRI, and the second is Mulya, which is a case study competition. I request our Honorable Chief Guest, Dr. Manoranjan Sharma, to give away the certificates and the cash prizes to the winners. The third prize for Yaksha Prashna goes to Nishant Prabhu and Satyajit Prabhu. The second prize goes to Krishna Shashadri and Ritvik. And the first prize goes to Gautam KS and Sharan Vishwanath. The winners for Mulya are Soumya Kanti Mitra, Avirup Chatterjee and Arnab Mukherjee. Thank you, sir. It has been a great honor for us to have with us eminent personalities from the industry who took out valuable time from their busy schedules to come to Horizon 2012. I now request Professor Chaudhary Prasad, Dean Branding and Promotions, to present a token of appreciation to them. Dr. Manoranjan Sharma, Mr. Arijit Mukherjee, Mr. Sushil Shah, Miss Lavanya Ashok, and Mr. Rohan Philip Mathew. Thank you, sir.
Every time before the commencement of the program, the MCs keep on telling, switch off your mobile phones, switch off your mobile phones. Like all of you, I have the temptation of keeping on my mobile phone with vibration mode. Many calls were coming during the day, and one SMS, because I was not taking the calls that came to me, is very interesting to all of us. The message says, Outlook magazine, this issue is India's best business schools. In that, your college got South India top 3 and All India 18th rank out of 75 B schools. So I was trying to control myself because this is the season we would be expecting our B school rankings. We work very hard for all these things, all these activities, our achievements, industry interactions, we have to present it. Like my friend was suggesting that audited balance sheets and all are used for ranking, rating purposes. For our B school ranking, all these kind of activities really help us. So we have been doing so many activities. In the process, we are enriching, we are exhibiting to the world what we are. Possibly this is one token of appreciation that we got on the right day. I am very happy to share with this you all.
Let me take this opportunity to introduce to you Team Finance Forum, which has worked very hard to make this event a grand success. From PGP2, we have Nishit Maheshwari, Raghavendra Rao, Nitin Jindal, Varun Sharma, Ankit Mittal, Rama Rao, Vidhi Jain and Nikhil Bed. From PGP1, we have Sahil Maheshwari, Ankit Thakrar, Deepak Podar, Dhruv Jyoti Patra, Antariksh Gupta, Ajay Kumar, Mohika Agarwal, Tanu Bindra, Tripta Bath and myself, Pooja Jain. I now request Professor Chaudhary Prasad to deliver the vote of thanks.
There is not much anything to say except 20 plus years of reforms cannot be summarized into one day. We have done a hurried job of attempting to relook. We people who are 40 plus at least have seen the pre-reforms days. Only yesterday evening I was sitting in a small get-together with some doctors and others in Valley View Hotel. On the TV, the program was going on, Dr. Manmohan Singh giving some lecture and all. Suddenly one doctor friend, who is about 35 years old, was saying, what is this reforms? My God, I thought. A gentleman of about 35, 40 years old doesn't know what is reforms. You youngsters who are 23, 24, born around 88, 89, what will you understand about reforms? We have experienced reforms. For a gas connection, 6 years. For a scooter allotment, 12 years. For a telephone allotment, 10 years. We, at least for my age, we have experienced for a trunk call to materialize 6 hours. Even in a city like Metro, Bombay, I recall. So I was wondering yesterday what to tell this gentleman, that in a party we were sitting, what is this reforms Manmohan Singh is talking about? At last he is speaking. He was father of reforms. Much before that reforms have started in late 80s itself. That is exactly the time this first credit rating agency called CRISIL was born in India. Thereafter ICRA, CARE and other things have come. Housing finance and National Stock Exchange and NSDL kind of things have come. Financial sector reforms have started in late 80s silently. Then your stock market scam has taken place, Harshad Mehta. We have seen. I had the proud privilege of seeing Harshad Mehta in this distance in State Bank of India, Mumbai. He came to tell the chairman of State Bank of India, don't worry, your 10,000 crores I'll pay. I'll do some manipulation or the other. I'll pay. He had the guts to come and say, those were the days we have seen, my dear friends. And thereafter also there was another stock market scam. The transitions we have seen from ordinary, stock settlements to electronic settlements and all that. Somebody was mentioning about DMAT and all those things. Pre-DMAT we have seen, then post-DMAT. Even after that, I can't recall the second scam that has taken place. So reforms in almost all these things nearly are 2 decades old. So we just cannot compress them and discuss in about 2 hours or 2 days or whatever it is. Because any type of government that has come after that 91, 92, 4, 5 governments have changed, 3, 4 prime ministers have changed. Nobody can stop the reforms. So I was suddenly scratching my head and what to tell my friend over a dinner, suddenly looking at the TV and asking, what is this man talking? All these days he was not talking. What is these reforms? Rectifying the past mistakes. What has not been there, what has been going on wrong, have to be set right. Possibly in a very, very layman's language, I tried to tell him these are all reforms, and there's a code words called LPG, liberalization, privatization, globalization. We have to go on telling. Again, to make a gentleman of about 35, 40 years old to understand and to accept that, yes, reforms is a must. Reforms are taking place. Reforms have happened in other countries, and we are definitely passing through crises because you generation, you have all taken birth late 80s or early 90s, if you are about 20, 21 year old. We have suffered pre-reforms times. We have passed through the pains in every aspect, like I told, school allotment or a telephone connection or a gas connection. We have seen the changes, and you generation are very fortunate. You are born in the new era, 21st century. Still, if you have got a lot of complaints, you should imagine what kind of a sufferings we have passed through. So we have seen the transition, we have seen the changes that have taken place, irrespective. Again, I don't know whom to blame. Our topic also includes somewhere politics, whether politician to be blamed, like Dr. Sharma was telling, regulators to be blamed. Somebody was asking, will there be a overall panacea called one regulator taking place? We don't want regulators. Do we want regulators? Do we want regimentation? We don't know. There are regulators for every aspect of financial activities. With all these things, we are even now feeling that there is something wrong. So a lot of churning has taken place. A lot of youngsters have, I can say they are all youngsters because at least two of them, I've taught them, they have really grown up and then handling portfolios in Mumbai, which place I love a lot because the actual finance happens in Mumbai. So they have come down all the way from Mumbai to share their live experiences, day-to-day experiences with you youngsters. We are extremely grateful to all of you. You have come down to share. So thank you very much.